Hello, I'm Simon Watkins. I'm one of the writers here at Rotic Media. I write across a wide range of topics, a fair bit of private assets in the last year, but many things. Well, fundraising in private assets has come down from the peaks it hit in 2021, but that was a record peak. So I think we can say that the fundraising in private assets is still very decent. The backdrop, of course, over the last year, as it has been for a while now, is the state of the economy and public markets. Obviously, inflation has long since peaked and is on the way down. Interest rates also look like they've hit their peak and maybe about to start reducing, but they're still elevated by historic levels. So there's lots of questions in the air about the economy, what type of landing we're going to have, whether there is still a possibility of recession in some developed economies. So there's a lot of uncertainty in the wider economic picture. This is playing, I think, still to private market managers. I think they feel it strengthens their case for private assets, that they offer diversification, they offer a kind of longer time horizon, for investment horizon, which they hope will perhaps see them through the volatility and the uncertainty that remains in the wider economy and public markets. There are two things that leap to my mind that have happened in and around the private assets market in the last year. The first of that is the continuing drive and interest from institutions in private assets. Now that's already been underway for a while and is a relatively long-standing trend. But there's something of an acceleration going on, and that's being driven partly, I think, by public authorities, governments who are quite interested in nudging institutional investors towards private market assets. The second one is private credit. This is something that here at Rotic we've done a lot of work on over the last few months. A lot of clients have come to us either already in the private credit sector or considering launching funds who are looking to expand and are looking to promote it as an asset class within private assets. Obviously, the general case for private assets applies also to private credit. The issues of diversification, it offers a way of diversifying away from public market assets, those long-term time horizons I talked about and the returns that are available. But there are also some specific things going on, I think, that are driving this. The economic conditions I've talked about, the degree of uncertainty that there is in the markets, is doing something in credit. Banks have withdrawn and have retrenched a little bit from certain areas of lending. That's been underway since the financial crisis, 2009-10. Now we're in another period of economic uncertainty. Banks, again, I think, are looking at their balance sheets and wondering whether they've got loans there that they would rather not have there, and maybe being a little bit risk averse in their lending. That's certainly what private market managers are saying. They would want to believe that. That's creating an opportunity, they feel, for private credit to lend money to businesses, mid-scale businesses, that might be finding it hard to raise their financing through traditional means, through banking or through public markets. And they see that as an opportunity.